Okay, good morning, everyone. Trust we are doing good. Welcome to another webinar series with me. I'm your host, Akinwale Chibuike, and I'm walking you through the Smart Trader's Guide to Forex, Liquidity, and Volatility. So, as usual, let's do the quick one, the sound check. If you can hear me properly, please do drop a message in the chat box or your favorite emoji. Just drop something in the chat box if you can hear me properly and you're following along with me. Okay? Let's quickly do that. If you can hear me properly, drop something in the chat box. Yes, Karachi, good morning. How are you doing this morning? Wow, so today is going to be an amazing session and mind blowing, I promise you. Okay, so um, let's do a quick one. Let's do a quick poll first. Okay, have you okay, so a quick poll is coming up right now. Okay, so the poll is up. So the poll is, have you heard about liquidity or volatility before? Okay, let's all respond to it. Good morning, Aruma. Hope you're doing good. I'm glad I placed the call to a few people and a lot of people are turning up on the webinar. It's a pleasure. It's a pleasure. Like, thank you very much for accepting my invite to join me. Good morning, Chooks. Hope you're doing good. I called you also. Good morning, Moses. Good morning, everybody on the call. So please let's respond to the poll, okay? Let's respond to the poll. Let's respond to the poll. So I like the fact that we are actually increasing the numbers on our webinars, and the fact that everybody is taking out time to implement the things we teach on the webinar. I love that fact because I get messages every day from our clients that this thing we talked about worked in the financial markets. He'd love to see more of it and all. And I'm very glad about that. I'm very glad about that. So I'll be dropping another poll, just two polls for now. Okay, so another poll right here. Send it in. Okay, so I've sent in another poll. Just respond yes or no to the polls. It's very simple. Just click yes or no on the polls. So we're 7 on the call, and as usual, we have an outline we follow for our webinars. So let's go down to the next thing. So what do you know about ego global markets? Okay, like you just know ego global markets is a broker, but what do you really know about ego global markets? And that's what I will be walking you through now. The fact that we get a few more people on the webinar. Okay, so let's dive right into it. Eagle Global Markets is a brokerage firm owned by an African or a Nigerian to be precise, and we offer you a series of products. We offer you platforms to trade the financial markets, platform to access the financial markets, even if you don't know how to trade the financial markets. We have the MT4 platform where you can trade the financial markets in dollar. We have the cloud trade platform where you can trade the financial markets in our native currency, which is the Naira. And also we have the cloud trade, sorry, the copy trade, where if you don't know how to place the trade in the financial market, or you're working overtime, you're busy, you don't have time to access the financial markets, you're always busy at work and all. The copy trade platform is a platform where you could actually get access to a lot of financial traders, okay, a lot of financial analysts and traders that you can copy their trades and they are consistently profitable in the financial markets. Good morning, Ayodeji. Hope you're good. So that's what we offer you in Eagle Global Markets. And if you don't have a trading account with us, still, if this is your first time joining our webinar, you don't have a trading account with us, all you need to do is just go to eagleglobalmarkets.com. I'll drop the website in the chat box. Eagleglobalmarkets.com. Sign up a trading account with us. When you sign up a trading account with us, a dedicated account manager will be given to you to walk you through all our platform, all our products, and any time you have any issue in financial markets, the dedicated account manager will come. You will reach the dedicated account manager, and he or she will walk you through the process. Okay, yeah. So that is it on the products and services that we offer you, and also we have the best the best customer service in the whole industry. Okay, so the account manager isn't forthcoming. Do you mind letting me know his or her name so I can reach out to them and possibly query them for that? Okay. So because your account manager should be able, you should be able to reach your account manager 24/7. Okay. So let's talk. Okay, let's talk. A quick Q&A before we hop into what we have today. I'm just like trying to create time and space for those that are possibly busy and still want to join us, so they don't miss out on the goodies. So a quick Q&A. What was our last discussion? The last webinar we had. What was it all about? Can anybody at all tell me what it was about? Can anybody at all tell me what it was about? Okay. Our last webinar that we had last week Thursday. Can anybody at all tell me what it was about? Can anybody at all tell me what it was about? Anybody at all? Exactly, being a profitable trader in 20. Nope, 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 nope. That was Tuesday's class. Okay, that was Tuesday's class. But at least it was last week, so you did give a thesis on it. Movement on the charts. No, nobody can. No, can nobody? Can anybody at all tell me like the pinpoint what we did last week? What we did last week was actually understood how not to trade. Like everybody was trading a certain way, then we understood how not to trade that way. Then we traded the right way. That was what we did on Thursday last week, where we placed trades. Can anybody remember? We placed trades, like three trades. They ran into profit. We closed the trades before we left the webinar. Can anybody now remember? That was what we discussed, and that was actually to show everybody that you can make money easily from the financial markets. The financial markets is something never difficult. It's very easy, simple and straightforward to make money from the financial markets. And also, and also, you don't need to have billions in your trading accounts or millions to make money. You can start with as much as with as low as 10,000 naira. Start trading the financial market as low as 10,000 naira. Start trading the financial markets, and you make a lot of profits in the financial markets. Even with as low as 5,000 naira, you can start trading the financial markets and make a lot of profits. Yeah. So yes, there is a recording on our YouTube channel. Okay, there's a recording on our YouTube channel. You can get access to it. On YouTube, just search Eagle Global Markets. Okay, it's take you to our YouTube page directly, and you will get access to it. There's something I want us to do, possibly after we talk about today's topic. Okay, now I will just bust the bubble after today's topic. Okay, when we're done with today's topic and the Q&A, then I will bust the bubble. Okay, now how was your trading week? How was your trading week? How was your last trading week? How did it go? Let's talk about it. Was the result good? Was the progress amazing? Let's talk. Let's talk. Let's talk. Tell me about your last trading week. How was it? How was it? I believe last week was quite amazing for everybody. So I'm expecting positivity, positive response. Expecting positive response on how our trading week went last week. How was your trading week last week? Is there any mistake you made or anything you want me to look at? Possibly a loss you took. Why did you take that loss? Or when you managing your emotions the right way? That kind of thing. Anybody at all? I just want to know how your trading week was, specifically to where I can help you to better your trades. Any trade you place in the financial market, how you could. Oh, you were not able to trade because your account wasn't funded. Yeah, it will be rectified today. It will be rectified today. Very, very sorry about that. Great, 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 great. That's amazing. Brilliant. I'm glad you recovered from the little mistake you made. And that's just the logic. Like it adds up. It adds up over time. It adds up to like you don't just okay, you don't know the difference between a retracement and reversal. Okay, you can move that to the question aspect of the chart. Okay, move it to the question aspect so I can go back to it after the webinar. Okay. Understanding how not to trade. Okay, you know what I'll do for you Friday? I'll reach out to you on WhatsApp and send you a doc file that I created so you can actually understand how to trade clearly. Okay, so I think everybody had a good trading week last week because the responses are quite amazing, and I'd love the chat to be filled with conversations as the class goes on. Fisayo, how are you doing? I called your number, but it wasn't reachable. Yes, it wasn't reachable. Hope, welcome. Thank you for joining us. I hope you're doing good. So, yeah, I love the fact that everybody's actually having a good, had a good trading week last week, and we are all bubbling in the chat box. Okay, so like I said, there's a little tax we will do after the topic. So let's all get prepared and ready for it. And also, if you are in Lagos, you stay around Lagos, we'll be sending out your packages today. And also, if you stay around Lagos, you've not gotten any package from us before, you didn't get any MEC, we didn't promise you any MEC, just state it in the chat box below. I will just copy your name and check in our database or reach out to you for your address and your other details to get your package sent to you. Okay. Thank you very much. So let's dive right into today's class. Today's class, we'll be talking about the Smart Trader's Guide to Forex Liquidity and Volatility. Okay. Those that are not in Lagos would actually have to schedule something. Okay, so the Smart Trader's Guide to Forex Liquidity and Volatility. Okay, can anybody tell me? Okay, I think I did a poll on that. Have you heard about liquidity or volatility before? And everybody said yes. Okay, so in your own way, what do you think forex liquidity is, or what do you think liquidity in the financial market is, and what do you think liquidity or volatility in the financial market means? Can anybody at all? Anybody at all? I'd be glad to get a response. I'd be glad to get a response. Anybody at all? What do you think liquidity is? What do you think volatility is in the financial markets? Okay, so Karachi says in a layman sense, liquidity signifies the availability of cash. Brilliant. I love that. I love the way you put it. While volatility is the speed of change, either up or down. And I love the way you did it. I love the way you did it. Anybody else? Anybody else? Okay, I just said market money. I just do you mind structuring that in a more better form that we could all relate to, okay? Liquidity is how active the market is. I can see some people are actually going to check Google. Well, the thing is, you don't need to go and check the internet for an answer, okay? You just need to understand the structure of what it is, okay? You just need to understand the structure of what it is. Now, Moses said liquidity is the ease of converting an asset into cash. I will take that in an economic term, and volatility is the risk or movement of the market. Okay. I think I've gotten enough response when it comes to liquidity. So let's dive right into it. Let's dive right into it. Now, you see, when we talk about liquidity, before we talk about liquidity first, let's just go to the next slide. Okay. So what we'll be learning is what is liquidity, what is volatility, the difference between volatility and liquidity, and how to spot them, the application on the charts. Okay. Now, when we say liquidity, I never knew I got myself on mute. So, like I was saying, what we'll be learning is liquidity and volatility in Forex. Okay. And we're talking about what is liquidity, what is volatility, the difference between volatility and liquidity, or liquidity and volatility, how to spot them and their applications. Okay. Now, when we talk about the financial space, the financial space is price, okay, pricing model. And pricing model is all about liquidity and volatility. So when they're talking about liquidity in an instance, what is liquidity really? Liquidity is just cash flow, okay? Movement of money, movement of cash in the financial markets. Remember, Forex is a $6.6 trillion market traded daily. Okay, $6.6 trillion is what moves in the financial market daily. That is the liquidity of the financial markets. Am I making sense? Am I making sense? If I'm making sense and you understand what I mean, drop something in the chat box. Okay, let's be fast with that. Let's drop something in the chat box if you understand what I mean. Now, liquidity is the cash flow or the movement of money in the financial market. It's also said to be how active. A financial market can never be active if there is no liquidity. Okay? So liquidity has to be in the financial markets. Then we can say that means money has to be in the financial markets. That is when we can say the financial market is active. Okay? Now, let's use a life example the same way I always use a life example when explaining these terms. You own a grocery store, okay? You own a grocery store. What is the liquidity of that grocery store? The liquidity of that grocery store is the number of people that comes in and out of your grocery store. Let's just put it that way. Do we understand now? Do we understand now? So the grocery store is the number of people that comes in and out. Liquidity. That's the liquidity of your grocery store. The number of people that comes in and out of your grocery store. So let's say if you have 2,000 people coming into your grocery store daily, in and out. That means your grocery store is active by 2,000 liquidity. Do you understand? Do we all understand? If we do drop something in the chat box, I love the fact that we are 15 and we are going to increase numbers on the webinar, but I don't like the fact that nobody's saying something in the chat box. Let's try to reason together. Okay. And also, they are running polls. We are 15. I just have 7 responded to both. Let's do what to respond to the polls also. Brilliant. Now that we understand what liquidity is, let's go to volatility. Volatility is change. Okay. Now, possibly when we were in school, we've had something. Okay, Debbie said she doesn't understand. Before we go to volatility, let's explain again. So, Debbie, I said liquidity is cash flow in the financial market. How money comes in and out of the financial market. When money comes in and out of the financial market, it makes the financial market active. Okay, so liquidity can be said to be the cash flow of money in the financial markets to keep it active. Okay, so If I'm talking about a grocery store, for example, using a life example, a grocery store, a grocery store, the liquidity of the grocery store, we're just saying in an instance, let's just say the grocery store is a show store, okay? The liquidity of that grocery store is the number of people that comes in and out, okay? In and out of that grocery store. Now, if we have 2,000 people, say the liquidity for that grocery store is 2,000 people. Maybe do you understand now? Or let's take for instance, I like to use supercars. So let's take for instance W Motors. Okay, W Motors is a Dubai car-based brand, supercars to be precise. So W Motors decided to create a car. Then they said the car will go for $1 million. The liquidity of W Motors relating to that car is the number of people that comes to and fro to check the car or to come and price the car. David, do you understand now? Yes or no? Do you understand now? And if there's anybody that doesn't understand or just kept quiet, do you understand now? I'm trying to make everybody understand and follow along or follow through this. Does everybody understand now? I'd like to get a response. Does everybody understand now? Okay, since we're mute, I'll take that as a yes and proceed. Now, when you say liquidity is flow, cash flow, okay, that comes in and out of the financial market, how active it is. Now, what will volatility be? So, what is volatility? Volatility is just change in price, okay? Is the changes in price of a financial instrument. Now, you'll be wondering how can GBP go from 10 pips to 200 pips in a day? You've been wondering what made GBP go from 10 pips to 200 pips in a day is just what the volatility in the market at that period of time. Now, volatility is just when people now come into your grocery store. When you see that there are 2,000 people coming into your grocery store, you now decide to increase the price of a spaghetti from $1 to $10. Okay, so what this is telling us is that liquidity is what or can affect the volatility in the financial markets. When there's too much or there's a lot of money in the financial markets, price will trade higher or lower faster. Remember, this is liquidity, money. Then price is trading. That's volatility. The changes in price will be very, very fast. Do you understand? So a lot of people are coming into your grocery store and a spaghetti costs $1. Now, because if you see that there are 2,000 people coming in and out every day, you decided that you'd increase the price of the spaghetti to $10. So what is that saying? That is saying that the liquidity, number of people coming in has affected the price of your goods. Okay? Do we all understand? The liquidity, number of people coming in has affected the price of your goods. That's volatility. It changed the price from $1 to $10. Do we all understand? Do we all understand now? If you do understand, please drop something in the chat box. Thank you. Great. Okay, so now that we understand um, what liquidity and volatility is, let's now go to the differences between liquidity and volatility. Now, remember I said liquidity is money, cash flow. Volatility is change in price. That is just the major difference. The major difference is that liquidity is just cash flow, volatility is what? Change in price. Now, there's one thing I will tell you that is very or true, that is just the truth about the financial markets, is that in the financial markets, nothing is guaranteed. Okay? There's no guarantee in the financial markets. There's no guarantee that you will make money, and there's no guarantee that you will lose money. But there's a guarantee that as time goes on, the more you put in your time in the financial market to study and understand price, the more you put in time to trade the financial markets, there's always profit ahead. That's one thing I can guarantee you. Now, the same comes to liquidity and volatility. See, liquidity, when you place a trade, what it helps you do is that it helps you make that your trading order activate at a certain price. So let's say, for instance, you want to enter dollar EURUSD at 1.20, 1.20. If there is not enough liquidity in the financial market, it will activate at 1 point, possibly 21 or 22, 1.22. But if there's enough liquidity in the financial market, it will activate at exactly 1.20 or 1.200 something, but very relatively or very, very close to 1.20. If there is not much volatility in the market and you bought EURUSD, your price will not easily move to your target or to your stop loss. But if there is much volatility in the financial market, price will easily change value, like move drastically to your profit or to your stop loss. Do we all understand? Are we all following? Do we all understand? Are we all following? Now, that's just the major difference between liquidity and volatility. So before we go to how to spot liquidity and how to spot volatility in the financial markets, can anybody tell me or just give me a short summary of what we've talked about, the last 3 points we've talked about? A short summary of the last 3 points we just spoke about. Okay, I can see someone is typing. Good, 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 good. I love the way you put it. Volatility is movement in prices as a result of liquidity. Brilliant. The flow of money. Brilliant. I love the fact that few people can actually understand and follow along towards what I've been saying. Okay, I saw someone typing. Just drop it, drop it, drop your thoughts. I'd be glad. Liquidity is cash flow, while volatility is increase in price because of people. I love that. I love that. I love that. Now, now let's go to how to spot liquidity, the application towards liquidity and volatility. So I'll be sharing my charts right now, and let me just load my chart before I share it. Trying to actually load my charts actually before I share it. Trying to load it. Okay, Karachi says, while volatility deals with how fast the money flows, that is how I understand it according to your explanation. Brilliant, brilliant. I love the fact that you're taking notes, Karachi. Okay, so let me share my screen right now and dive right into it. Okay, so yeah, let's go. Now, you said volatility is cash flow. How do you spot volatility in the market? Sorry, we said volatility is the change in price. That means how price changes fast. Okay, now how do you spot volatility in the financial markets? We'll use a few examples. Let's use the general or the common pair, which is your USD. Now, if we remember, um, during one of our webinars, we analyzed ERUSD, and I said ERUSD will sell from this area. If you were on the webinar that day, please signify. Okay, please signify if you were on the webinar that day that I said ERUSD will sell from that box right there. Please signify. You can see what happened initially. We came to that box, or we came into that box, and we sold off from there. Like, these things are very, very easy to do once you just go and keep practicing the things I explained on here. You find them very, very easy to do. So I'll just delete all of this, and let's now talk liquidity. So, sorry, let's now talk volatility actually. Let's deal with volatility. So we said how fast price can change. Now, let's take this piece of example right here, this piece of price action here. Now, look at how price sold off. Now, look at how price bought. Where was volatility in this phase? Was volatility here or here? Okay. Let me just use, if I can get something to color it. Was volatility here? Okay, let's take it from this top. Was volatility here, or was volatility, let me see if I can change the color, or was volatility here? Which one? Was volatility here or volatility here? And anybody at all? Anybody at all? Where was volatility in that piece of price action? Just from what we said, volatility is the change in price, how fast price can change. Okay, okay, nobody. Okay, Karachi is about to give it a try. For me, you said for you for the second. Wow. Okay, okay, okay. I'll take that. I'll take that. Anybody else? Anybody else? Now we said how fast price can change. Okay, Debbie also says the second. Wow. We're talking about volatility. Okay, volatility. Okay, Sawyer is about to say something. How fast price can change from one point to another. It's the prices. Okay, exactly. We're talking about how fast price can change. Okay, okay, okay. I'm glad everybody had something to say. But when we look at this piece of price action here, and look at this piece of price action here, to be very candid, this was volatility right here. Like this was volatility right here. Now you'll be wondering why did I choose this as volatility? And I'll prove it to you. I'll prove it to you in just a minute. Now let's use this to explain. We said from this high right here to this low right here. Okay, so this was 6 down candles. Let's just, okay, let's pick it from this high right here. Okay, this was 3 down candles, and it took 4 days to move from, let's see, I can get the price out a minute. It took 4 days to move from 1.1152 to 1.8461, and that was 267.3 pips. Now let's see this piece of price action from this low to this high right here. It took price. Okay, let's see what's happened actually. Price moved 158 pips to the upside. Now let's check the date range. It took price. Sorry, how can I get that back on here? Okay, let me just put that back on. Okay, so we said from this low right here to this high. It took price what, 8 good days to be able to move 158 pips. Now tell me, where was the volatility from what I just explained? Remember, 200 and 67 pips in 4 days, but 180 something pips in 6 days, sorry, in 8 days. Now tell me, where was the volatility at? Was the volatility at the 267 or the 156? Just using common sense, okay? Using common sense. Now, anybody at all? Anybody at all? Anybody at all? Christian, do you want to give it a try? Anybody at all? Nobody's typing. Okay, volatility was to the downside. Exactly 267, because it took it a shorter period of time to move massively. Okay, it took it a shorter period of time to move massively in a certain direction. Exactly. Then why are we saying the second one, which was the uptrend or the small uptrend? Do we understand now? Volatility is the change in price. The period price takes to change. See how volatility washed to the downside. Like we had 4 consecutive what red candles, and price moved the whole 267 pips in 4 days. Now it took it 8 days just to move 159, and that's what we're talking about. Now, what caused that volatility to the downside? Can anybody at all tell me what caused the volatility to the downside? Anybody? What caused volatility to move to the downside? Just looking at that piece of price action there. We've talked about these things over and over and over again. Anybody at all? Okay. Okay, Karachi wants to give it a try. I'll take that, the hanging man. I will take it, but there's something else I want you to see. There's something else I want you to see. There's something else I want you to see. I'll take the hanging man. Fine. I'll take the hanging man, but there's something else I want you to see. Exactly the liquidity of the currency. Now, tell me, where did the liquidity come in? Simple. The liquidity came in as the hanging man. Okay? The liquidity came in at the hanging man. And this is it right here. Oh, Karachi, it was not the hanging man, it was an indecision candle. I think this is what you're trying to refer to. Now, look at where liquidity came in. Liquidity came in immediately. That indecision candle came back to retest this area of structure. That was where they now short. They went short on the dollar. Can you see now? Okay. Can you see it right here? So this was where liquidity came in. Then the liquidity that came in reacted, created volatility to the downside. It brought liquidity. That means cash flow. More money came into the market at this area right here. Again, more money means price will move faster. Price moved faster to the downside. Christian, do you understand now? Christian, do you understand now? Oh, I'm very, very sorry. So I said this right here, this right here. This was where liquidity came in. Liquidity came in, reacted, volatility took place to the downside. Okay. Let me just change my mouse settings. A minute, let me just change my mouse settings. I think it's under this area right here. Appearance, crosshair, then show color black so everybody can see it. Can you see it now? Can you see it now? Just right here. That area right there. Okay. Yeah, liquidity started after the hanging man, but if now, Karachi, let me tell you this. Would you have sold ERUSD at that hanging man? Be candid with me. Be candid with me. Okay. Would you have sold ERUSD at that hanging man? Okay. But now I agree with you that you would have sold it. But remember, let's say this piece of price action is not there. Okay, I know you are just saying you would sell it because of you've seen that piece of price action. But let's say that piece of price action is not there. You would have called this a what, a break in market structure, right? You would have said this was a break in market structure. You would agree with me that you would have called this a break in market structure. I'm not trying to say you don't know what you're doing, but I'm just trying to give you my own thoughts on it. You'd have called this a BMS, a break in market structure. Okay, they've called this a BMS to the upside, and you would have gone down to the 4 hour time frame. Wow, my replay button won't work on the 4 hour time frame. So let's just scroll back in time. Now, you would have called this a what? A BMS, right? That said this was a break in market structure. And you would have said this was a retracement. You would have seen this indecision, traded higher, closed the move, you would have bought right here. I'm very, very sure. I'm very, very sure. I'm very, very sure that that's what you would have done because of that previous price action was not even there before. That means all of this was not here. That means all of this was not there before. Okay, let's now look. Let's focus on this area. All of this was not there. That means all those red candles he saw that said he would be buying was not there before. So you would have looked at this as a breaking market structure again, a retracement for more buy. You would have gone down to the 1 hour to go and even get the precise entry. And what happened? Would have triggered your stop loss, possibly put your stop here, or put your stop here, would have triggered it. Then this is when you now agree that there was a BMS to the downside, a break market structure to the downside. You would have went short. That's what I think you would have done. But since you said you would have sold, no problem at all. And also, like just trading off the hanging man alone, you would have waited for confirmation. So I don't really believe there is a way you would have just sold because of you saw an hanging man. You would have waited for this second day candle to close. I even believe you would have taken the sell. Yeah, fine. I believe if you are taking the sell at the second bearish candle because of you've gotten your confirmation, we closed below the hanging man. But saying you would have sold at this hanging man, I really don't believe it. That's just my thoughts, though. My thoughts. Even though I trade institutional method, I would have not even gotten my sell yet. Fine, I would have seen this as a turtle soup buy model, sorry, a turtle soup sell model, but I still wouldn't have entered because of it's just not, it doesn't add up. Like I would still be very bullish because this was still a BMS, right? I would still be very bullish until I have gotten this. I could have gotten my trade in here because I felt this was liquidity right here. Brilliant. We'll talk about that. I will do well to like talk about it in the class we'll be holding on Thursday. If you want, okay, let me just drop a poll. Let me drop a poll. Please let's respond to the polls. Please let's always respond to the polls. I've just got five. Okay, I'm trying to send in a poll. Okay, I'm trying to send in a poll. There you go. So the poll is: do you want a live trading class again on Thursday, like we did last week Thursday? Just respond to it. Just respond to the polls, okay? And if you've got any question, please ask your questions. Okay, so Precious said she doesn't understand. Now, Precious, we're talking about volatility, how price changes, how fast price can change, and liquidity, which is what gives us volatility. Now, what I said was this. We said, you see how price moved 267 pips in 4 days, in 4 days, and price took 8 days to move 157 pips. Which one would you consider as volatile? Would you consider this as volatile or this as volatile? And everybody said they would consider this as volatile, which I corrected that this was volatile because of it moved a higher number of pips in a short amount of time. So, Precious, the general thing is to understand where price is going, how fast price is going, and when money is coming into price. Okay, so like we said, if this was your now, let's box this. Let's box this. If this was your grocery store, you owned this grocery store, you own this grocery store, and you saw that 2,000 people used to come in every day. Okay, these are the 2,000 people coming in every day. Then you realize that if 2,000 people are coming in every day, you could sell your spaghetti at the rate of $10 and not $1. Then you now made an announcement that, okay, everybody out there is selling their spaghetti $20. Your own was $1 before. That was why 2,000 people were coming in. You now said, okay, you start selling at $10. It is still cheaper than other people's own, right? It is still cheaper than other people, and it is more what's it called? It's more sweet than other people own, right here, or it's more delicious than other people own. Then imagine you now said you start selling at $10, not $1 again, but still cheap than other people own. What will happen? People will still tell their friends that there's one place they sell a spaghetti for what's it called? They sell a spaghetti for $10. It's delicious, it's this, it's that, it's better than that old restaurants. People will still tell people more. Then volatility, that means more money will come into your grocery. Yeah. Then when more money comes into your grocery, yeah, remember now let's calculate this. Let's say this, let's calculate this right here. This was just 4 days. Okay, this was 4 days. Let's just say it closed here. Okay, so this was 5 days, and let's see this. Let's now do this. Sorry, I can't use that. Let's use the one we are supposed to use, which is price range. So using the price range, in 4 days you were making, that's when you were still selling $1, you were making $153. Now you now gave that announcement, and the spaghetti was much more sweet, delicious, and all. You now give that announcement, people now told their friends more. Then their friends started coming in here. You now made, in a single day, you now made $270 for selling at $10. Do you understand now? Precious, do you understand now? If you do, please let me know. And if you don't, still let me know. I will explain again. Be here for you. Do you understand now, Precious? Drop something in the chat box if you do. Brilliant. Now, do we now understand the difference between liquidity and volatility? Now, let's go to how do we apply liquidity and volatility. Okay, let's go to how do we apply liquidity and volatility. So I'll keep it simple so that everybody can be able to put this or practice this on a price action chart. Now, can anybody at all, can anybody tell me or give me a currency pair to discuss this term with? Anybody, just drop one currency pair, one currency pair. Anybody, just one, just one. Karachi says USD card, USD card it is. I always like to ask for the currency pair from you guys, so it doesn't seem as if I've gone back in time to go and check the currency pair and I'm just saying, okay, let's use this. No, no, it's not done like that. Now, let's apply common sense and logic to this. I want everybody to just look at this chart and tell me, from this chart you are seeing, where is volatility? Is volatility to the upside or to the downside of this chart? Where is volatility? Oh, Chooks just joined. Wow. Okay, I'll check your pairs also, Chooks. Where is volatility on this financial instrument, which is USD card? It is what? To the downside. We all agree it is to the downside, right? Now that we all agree that it is to the downside, okay? Now that we all agree that it's to the downside, what are we looking for? Are we looking for buying opportunities or selling opportunities? Are we looking for buying opportunities or selling opportunities? Are we looking for buying opportunities or selling opportunities? Brilliant. That is how you just apply this concept of volatility and liquidity. Now that we've spotted volatility and we understand that we are still going down on USD card, what do? We need to start marking out our area of structure, which is support and resistance, right? We need to start marking out our area of structure, which is support and resistance, right? Do we all agree? Brilliant. Now that we want to start marking out our area of structure, there are a lot of area of structures here, but we want to choose the one closest to price, okay? Closest to price. I'll make it simple and easy. This is one that is very, very close to price, right? This is one that is very, very close to price. Okay. Now, why do I pick this area? Because of this acted as what? Support here, broke through and acted as resistance. And this is a little what? Order block right there. Okay. Now, which other one is close to price? There's another one right here that is very, very close to price. Do we understand? So this was liquidity. It took price how many days? Now let's follow that logic again. It took price this one to go down here. Okay. Two price, let's count the candles. 1, 2, 3, 4, 5, 6, 7, 8, 9. It took price 9 days to move 392 pips. Now, just know that it will take price a longer number of days or a longer period of time for it to come back into any of this level. Forget this price is big. You can see tomorrow it might just create small ones before trading into this one or this one before we now look for selling opportunities. Now that we understand this, you'll be looking to sell here or here, but you don't want to sell there or there blindly, right? You can now go down to a 4-hour time frame. Remember, I taught you multiple time frame analysis. Now, on this piece of price action here, I can streamline that my what is it called? My support and resistance. I can streamline my support and resistance to suit very well. So I can drag it up a bit, drag it lower a bit. It's now smaller. This also I can streamline and drag it lower a bit, drag it up a bit. Okay, now we see it's all panning out. Now, what do I see right here? I see a double bottom. Do we all agree that this is a double bottom? Let me point it out. Do we all agree that this is a double bottom? How can I point out this double bottom? Okay, let's just use this. This is the first bottom, and this is the second bottom. Do we all agree that that's a double bottom? We all agree that that's a double bottom. Now that we agree that it's a double bottom, I want to tell you something. One secret. Well, it's not a secret. You might know it before, but I want to tell you this secret. The secret is that number one, a double bottom in a downtrend is a means for price to retrace back to a significant area of structure. Look at this. 1, 2. Look at where it retraced to. Back to the significant area of structure before it sold. Now, just put that in mind. A double bottom in a downtrend is a significance that price wants to retrace back to a significant area of structure before we come down. A double top in an uptrend. Let's look for an uptrend here. Wow, there's no, this is just a downtrend all through sha. But let's just looking for, I don't want to really disrupt what we're learning, but just the opposite is for a double top. Okay, a double top in an uptrend is just an opportunity for price to retrace back to a significant area of structure. Do we all agree, or do we now understand? Now that we have this double bottom, where will you be looking to sell? You'll be looking to sell USD card. Yeah. Or you can say, okay, price might want to enter the middle. So you say you want to follow the main threshold. Yeah. And use a 15 pip stop loss. Then your take profit will be below the double bottom right there. That's a 1 to 9 risk to reward ratio. That means if you are risking 1, you'll be catching 9. That means if you are risking 1% of your account, you'll be catching 9% of your account. And if you say, okay, if price gets here and fails, you can want to come and enter here. You might want to come and enter here, right here. So you can see your stop loss will now be 20 pips right here. And you want to place your take profit on this bottom right here. Okay, so that's a 1 to 11 risk to reward ratio. That's if you put in $1 in your trading account, you'll be making $11. If you risk 1% of your trading account, you'll be making 11% of your trading account. See how easy it is to trade. It's very, very easy. This is how you spot, this is how you understand what liquidity was, volatility was to the downside. Now, this support and resistance areas are areas you believe liquidity will come into the market. Why? Because of everybody is watching this area. Everybody has placed orders here. They've either placed limit orders, sell limit order here, or sell limit order here. That's just the simple logic to it. Don't be greedy to trade the buy because of it's a double bottom. Just wait for the sell. Do we all understand? Do we all agree and do we all understand? Yes or no? Okay, so let's go to what Chooks said. Chick said we should check USD JPY and GBP CHF. Chicks, I really don't do CHF pairs, okay? I really don't. Okay, Debbie said I should take it again. Okay, Debbie. So what we did was we went to the daily time frame. We asked a question that where is volatility in this, and everybody agreed that it was to the downside. So we said we want to measure on current market structure, current area of price to look for where we can sell. Now we said that this was an area of support now broke, which we are expecting it to act as resistance. We marked it out on the daily time frame. We said this is another area that acted as support, now broke, acted as resistance, but we expect it to act as resistance. We marked it again. We now went down to the 4 hour time frame to streamline this thing, to streamline it. Okay, so we said we want to streamline it to fit this area. We streamlined it. We want to streamline it to fit this area. We streamlined it. So we now said these are areas that liquidity will enter the market. When liquidity enters the market, volatility will continue to the downside. So that was just the logic. Then we said this double bottom is just an opportunity for price to retrace back up. It was just an opportunity for price to retrace back up into one of these areas. A double bottom in a downtrend is opportunity for price to retrace back into a significant area where liquidity will come into the market. A double top in an uptrend is significance for price to retrace back into what? An area of liquidity, where an area of structure where liquidity will come into the market. So that was just it, Debbie. Do you understand? If you're in Lagos, you've not gotten any merch from us, you've not won anything from us, just reply I, and I will just send you a message on WhatsApp and you've won a merch from us. That's just the meaning. If you're in Lagos and you've not gotten anything from us. And for those that has won before, we'll be sending out your merch very, very soon. Okay, Precious, noted. Just send me a message on WhatsApp. I'll respond to you. Moses, noted. Okay, so do we all understand how we got USD card now? So let's go and check USD JPY. USD JPY. USD JPY. USD JPY. USD JPY. So let's look at USD JPY. Now, where is liquidity in this financial market or in this space? Where is liquidity in this space? Is it to the upside or to the downside? Now, let's see who gets it wrong. Let's see who gets it right. Okay, uptrend. Yes, I agree liquidity is to the upside. Okay, I agree liquidity is to the upside. But yeah, I know everybody's wondering what's the but. Exactly, Debbie, you got it. It's broke. It's what it's broke. Now, the but was it's broke. Yeah, it's broke right here. Okay, there was a BMS right here. There was a break in market structure right here. So liquidity was no longer to the upside when this happened. This series of bearish candle happened. Liquidity is now to the downside. So we are expecting this as what? A retracement to the upside. Do we all agree? Do we all agree to that? Yeah, Christian, you can, you can. Do we all agree? Good. Now we can now comfortably mark out areas of structure that we think price will react from. Okay. Now let's do this. This is the first one right here. This is the second one right here. This is the third one right here. I don't really want to mark out the third one because it's of no significance to me. because price broke through it. Now, what we do is we go to the 4-hour time frame. Now, on the 4-hour time frame, I want to streamline it very, very well. I want to streamline it very, very well. So I'll mark this out right here. Okay, great. But what do we have on the 4-hour time? We saw that price was broke it, so it's of no relevance to me anymore. So this is what I'm looking at right here. This is what I'm looking at. Now, I want to streamline this very, very well also. Okay, good. Like I said, this is the area I'm looking at. And look at what happened. Price tested it before, came all the way down, now it's retracing up. Now, if you look at this closely, we had a mini break market structure right here. So we can now utilize the 1-hour time frame here. We are utilizing the 1-hour time frame here. Okay, this is where the break market structure happened. Okay, we can agree that that's where the break market structure happened, right? If I had wanted to sell this, like if I wanted to sell this, I would have gone down to like the 5 minutes or the 15 minutes. Let me show you what I would have done. Okay, let's go down to the 5 minutes. If I had sold this right there, this is what I would have done. What I would have done is look at this clearly. This is liquidity right here. So I believe there would have been a stop hunt to the upside. Then when this stop hunt occurred, this is the first dip. Okay, this is the first dip. This is the first candle I'll be looking at. Then I would have sold at either this bullish candle, sell a bullish candle, buy a bearish candle. That's what I would have done. So I would have sold at this bullish candle right here. Why would I have sold at this bullish candle right here? Very simple, because this is a reclaimed block right here. This was a reclaimed block right here. Because if we look down on the 1 minute time frame, I would have gone into this bearish candle and this would have been a reclaimed block. Don't worry, you don't need to know what I'm saying. It's just like support and resistance. You see now, that would have been a reclaimed block. So my order would have been somewhere around here. I would have even streamlined the reclaimed block closely here. So like my take profit will not be much though. Will not be much because this was where I would have been targeting. That means if I had entered this trade here, I could have used a stop loss of like 2 to 3 pips, depending. I've made what's it called? 37% of my trading accounts using a coming. I won't put my stop loss at this area right here because it's a small time frame. I put it at this high. So I'd have used like a 5-page stop loss and made 37.9% of my trading account. That's a 1 to 6 risk to reward ratio. So it's just bands. Yeah. So that's what I would have done. But back to what we were discussing. We said the 1-hour time frame. No, choose to sell, not to buy, to sell. I would have shorted because it reacted at that area of structure on the higher time frame. So I would have sold. So now, let's say this right here. Why did this price buy here? Very simple. It's something you can explain. Look at this. There was support right here. That was why price bought. But this buy is just a fake buy. Why? Because if I would sell USD JPY now, I would have sold somewhere around here. And I would have still been hovering somewhere around my stop loss and my entry. Because that's a block right there. But if I had gone down to like the 15 minutes to look at this area, this would be where my entry would be. Right here. Right here. So I would have gotten possibly at this area right here. And my stop loss will still be big though, because this is where I would have gotten in. For the sell now, I will still be hovering around what's it called? My entry and my what's it called? My stop loss. Because my stop loss will just be like 10 pips maximum, 10 pips. So that's a 1 to 5 risk to reward ratio. Well, the trade could fail though. It's all probabilities, nothing's guaranteed. So my take profit would be here. This is the old low. My take profit would have been there. So if I were to sell USDJPY, I would have sold right now. And just my target, so like one candle could have hit my take profits. You see, the thing is, time frame should stop confusing. That's the thing. When you understand general structure, in price, continue looking for general structure. If price is bullish on the daily time frame, when you go to the 4 hour, just know that if you see a sell, it's a retracement. Okay, just know if you see price selling on the 4 hour, it's a retracement. Okay, let me give you a logic that I use when I chart. Okay, if D1, I'll type it in the chat box. D1 is the daily time frame. Okay, if D1 is typing it in the chat box, if D1 is bullish, H4 is bullish. And you see H1 bearish. There's a tendency you see H1 bearish. What that H1 bearish is telling is that there's just a retracement or a correction in price. That's what it is telling you. Just a retracement or correction in price. If you see D1 bearish, H4 bearish, expect H1 to be bullish. That's just the structure behind it. So back to what we were saying here. USDJPY, we said what? Liquidity came in here, then volatility was to the downside. We retraced. Now let's do the same thing we did previously. How long did it take price to fall? How long did it take price to buy? Now let's see how long price fell or how much price fell. We start from this high to this low right here. 81 pips. 81 pips. And how long did it take? It took, let's see, it took 6 hours to create this bar. Now let's see how long it's taking price. I don't want to know how long it's taking price. Okay, see how long it's taking price to move higher. It took price 21 hours to create 22 bars. And the movement is very, very slow. Very, very slow to the upside. Let's see how many pips that is. You see the number of pips will even be small. 57 pips. So you see, volatility and liquidity is still to the downside after we've confirmed. So all we are expecting is price to just sell, for price to sell off. So troops, USDJPY, I will be looking to go short, or it's short term. I'll be looking to go short term, because if we go back to the daily time frame, if it breaks this high, that means market structure has changed to bullish. If it breaks this high, market structure has changed to bullish. But because of this indecision candle, I see price selling off soon. So tricks, my thoughts is to go short on USDJPY with what I just explained, using volatility and liquidity in financial markets. Are we all following? So let's go to GBP-CHF. Now GBP-CHF, as Chooks said, let's go to the daily time frame. Now GBP-CHF, what is volatility on GBP-CHF? Anybody? Can somebody tell us what volatility is on GBP-CHF? What is volatility? It's volatility to the upside or to the downside. Anybody at all? Volatility, is it to the upside or to the downside on GBP-CHF? I'd like to get more response. Okay, I'd like to get more response. It's not only Debbie that's in the class. I'd like to get more response. Okay, everybody said volatility is to the upside. Okay, Debbie changed it to down. Okay, it was to the upside and it moved down. Okay, it also broke. It seems to be down. Brilliant. That's what I was expecting. Now, this was a higher high. This was a higher low. This was a higher high. This was a higher low. This was a high. Then price broke structure here. So let's mark that out. Price broke structure there. Then we retrace back to this block right here, reclaimed block. What I just explained. The previous area of structure that price comes back to is reclaimed. right there. Okay, so we see price came back to reclaim that area, and you see from just looking at it, price traded to the downside took one, two, three, four, five. I just count those five. Took, I don't know, that's a huge number of pips though, like three or 400 pips to the downside because we know GBP moves like crazy. And look at this, how long it took it to go back to the upside, one to like 7 or 8 days. Now, with that, from just that knowledge, I know price is literally volatility is to the downside. Now, I can now go to the 4 hour time frame. Now, on the 4 hour time frame, what can we see? What can I can delete all of that. Now, on the 4 hour time frame, now, what can we see? We saw volatility to the downside or price currently to the upside. And now let's mark out those support and resistance. Okay, so we can see this acted as resistance before, this acted as support. This is resistance down here. Sorry, this is support down here. This is resistance up here. So let's just keep it that way. Now, what do you think we should be looking for on GBP? Should we be looking for a buying opportunity or a selling opportunity? Should we be looking for a buying opportunity or a selling opportunity? Okay, just I just want the general buyer. Should we be looking for a buy or sell, Karachi? Because you're saying a small buy then a long sell. Okay, sell, brilliant. Now, all we need to do is just we can now start saying we want to mark out our trend lines and all. So let's play with that. Let's mark out our trend lines. Now, marking out our trend line, what do we have? We can see price broke out. Okay, price broke out now is one aspect we now have to calm down before making any decision. Okay, we want to calm down before making any decision in the financial markets because there's already a breakout and I can't make my trend line imperfect by bringing it to this area. So I just have to put it there and now wait and see if and only if price closes inside this trend line and breaks this support right here. That's when I'll be looking to sell. So I cannot place a sell trade or a buy trade yet because price is still within a range. Okay, price is still within a range. So I just need to wait and see what price has to offer. That is just the way we understand, or that's the how we just impute what's it called, liquidity and volatility when we're trading. So I hope we all understand, and I will be inputting everything we discussed into action. We'll be using them on the charts and understanding how it is. So before we proceed to questions, before we proceed to questions, before we proceed to questions, I said there was one little task we needed to do. Okay, so first off, let's drop our questions. Let's drop our questions. Please ask your questions in the chat box. Sorry, let's drop our question is in the question section. Sorry, let's drop our question in the question section. If we have any question, let's drop it in the question section. Okay, so to what we want to do today, the little task we want to do. So EGM got nominated in a brokerage firm contest as let me just look for it. We got nominated globally and also in Africa. Number one as the what's it called? We got nominated number one as globally as the fastest growing broker, and we got nominated in the regional awards as the most trusted broker Africa and best broker Africa. So what I want us to do is for us to vote for illegal markets. Okay, Now I'll show you and teach you how to vote. Okay, I've already casted my votes before, but I'll just show you how to do it, so we can all follow along on how to do it. Okay, it won't take much of a time. If it's possible for you to do it on the webinar, as we are on the webinar, let's gladly do it. And if it's not possible for you to do it on the webinar, you just follow the process and um, we go through it together. Okay. So let me just share my screen. So there's a link I'll drop in the chat box. All you need to do is just click on that link and it takes you to the website, the Ultimate FinTech website. Okay. So this is the link right here. Now, if you click on that link, they will ask you to subscribe. Okay. Now, for you to be able to create an account with them, you need to subscribe to their newsletter. And I've been going through their newsletter. It's actually very, very amazing. It's something you need to start reading also. So when you click on subscribe, they'll tell you to put in your name, your email, your company name, your job title, and your business category. Your name should be there, your email should be there. Your company name is your own company name if you're working with a company or you have a company you're looking to build up in the future. You can just put in the name there based on affirmation. Like affirming things is very, very amazing. It will come to life real quick. Just put in the company name you work for, or the company you're looking to build, or your company or your current company you own. You put in the name there and you put in your job title at the comp of the company, then also your business category. So when you click on subscribe, an email will be sent to your mail, okay, by Ultimate FinTech. And when that email is sent to your mail, you will be able to set a password to be able to log into the website. Now, when you receive that email, just you set your password and just come here to log in. So let me put in my email. Then also let me put in my password. Wow, I can't even remember my password. I think that's it. Oh, I forgot my password totally. But when you log into the website, let me see if I could actually request for a change in password. Let me just stop sharing this. I'll quickly request for a change in password. And let's continue dropping our questions. If you have questions, let's continue dropping the questions. Okay. Let's see if I forgot my password. Submit. Let's continue dropping our questions. Yeah, let's just continue dropping our questions. I'll be responding to the questions once we just walk through the process of how to vote, okay? Because it's very, very important. If you do love us as a broker, you will gladly vote for us. Continue dropping your questions, please. Okay, so just did a reset on my password and let's go back to the website. Okay, share screen, and it takes less than a minute to vote for us. Okay, so let's go back to this. Now let's log in. Let's refresh this and log in. I'll respond to all questions. Let's just walk through how to vote. So when you log in, just do put in your password. And when you put in your password, all you need to do is just click on awards and come to voting. Okay. When you click on awards and you go to the voting aspect, it will load and you just need to scroll down. Now, just read the instruction here. Make sure you're subscribed and logged in. Go to the global and regional and country awards to review all award categories. Click on each category to see all the nominees. Select up to 3 brands you want to vote for in each category. Hit the submit button for your votes to go through. Now, remember, you can only vote once, so let's not make mistakes on this. So, we said on the global region, we were nominated for the fastest growing broker. So I already voted for right here. I already voted EU global markets right here. That was what I voted for. So like it's as it's here, you already voted. Now, after the global region, we were nominated the most trusted broker, Africa. So oh no, most regional, sorry. Just go and look for that regional awards. So under regional awards, we were nominated as the most trusted broker, Africa. So you click on most trusted broker Africa and it loads. So it takes a bit of time to load. Okay. Most trusted broker Africa. So it's just EU global market and scope markets. You just vote on EU or you click on EU global markets. It will mark it as the option you choose to vote. Then also best broker Africa. You scroll down and EU global market also. You click on it, then you just scroll down a bit and vote. That's how you get to vote for EU global markets. And I really appreciate this. This will mean a lot to me if you vote for EU global markets. Um, to win the awards that we were nominated for. It really go a long way in us creating more services for you, bettering the services that we offer you. Thank you very much. So let's go back to the questions. Okay, let's go back to the questions. Um, let's go back to the questions. Thank you very much, Karachi. Thank you very much. Actually glad. I love action takers. I'm very glad. Chicks, I shouldn't be paying for your food actually. That's very funny. So let's go to the questions. Wow. Okay, let's start. Karachi says his issue is how to know the difference between retracement and reversal. By difference, I mean how to know when a retracement or reversal is about to occur. See, um, Karachi, you can never know when a retracement and reversal is about to occur. But when you study previous price action, you can understand when these things will occur and take cover immediately. How will you determine if a volatility is winding up in an uptrend or in a downtrend? Now, how will you determine if volatility is losing its strength, right? You will start seeing rejection and wicks everywhere in price. Okay, you start seeing rejection and wicks everywhere in price. Um, Chooks, I trade at any time once I see a setup. Like I don't have a certain trading session. Okay, I trade at any time I see a setup. So if my setup comes in Asian session, I take it. If it comes in London, I take it. If it comes in New York, I take it. That's just me. That's just me. Friday, I don't really understand your question. Okay, there are times that I joining an instant execution because yeah, sometimes when you try to execute, when volatility is too much, it won't execute or it will quote you at another price. It's that volatility causes that also. You remember, if there's too much money in the financial markets, price will start moving drastically and there won't be enough, how would I say, like liquidity is too much, but your order won't be able to activate because pricing will be very different. Imagine you opened an order at 1.20, then volatility has already moved price to 1.22. So instead of them, or instead of we as your broker opening it for you at 1.22, we won't open your order. We'd let you see that you are going to be recoded, then you are going to reopen it yourself. So you don't say the broker recoded you, you recoded yourself. That's just it. Wow, Kelechi, morning. Hope you're doing good. So that's just it on volatility and liquidity. Like that's very much it on volatility and liquidity. I hope we learned a thing or two from this. And also, it's not about coming to my classes. I think I need to start repeating these things over and over again. It's not about coming to my classes. It's about putting these things into practice. You don't okay. They said there's this Chinese quote. I can't really remember who this quote is from, but I know that there's this Chinese quote which says, um, I really can't remember, but I think I'll just put it anywhere I like. Um, fear a man who has practiced one kick 10,000 times, but never fear a man who has practiced 10,000 kick just one time. Okay, somebody who has practiced one kick 10,000 times will know how to use just that one kick in 10,000 ways than somebody who just practice 10,000 kick once, you won't know how to use any. What that means is somebody who attends a class knows about it. Somebody who applies the concept understands it. Okay, so you understanding it means you can use it in any market scenario. Like I only used it on GBP, CHF, USD, JPY, USD CAD, and EUR USD. You did not apply it on other pairs. You did not practice. You did not place a trade using the method. You just know it, but you don't understand it like somebody who applies these things over and over and with shots. So that's just it. I'm not really trying to throw shots, but it's just what it is. So all I expect from you is after this webinar, not even after this webinar, there's no best time to buy in the financial markets. Anytime can be the best time to buy, anytime can be the best time to sell. All depends on you and your thesis about the financial instruments. That's just it. That's just what it is. So I hope we all learned a thing or two and we're going to put this into practice. I wish you good luck and safe trading. See you on Thursday. So back to the polls before we end the webinar. Back to the polls. Like I love the fact that everybody is actually reacting to the polls and all. Now everybody wants us to hold a live trading class again on Thursday. I would do just that. We'll have a live trading class again on Thursday, and to be fun filled and all. So if you'll be inputting these things into practice, I'll be glad. I'll love it, and I'm going to actually help create more clarity over and over. It's not about coming to the classes, like I said. It's about putting these things into practice. Once again, good luck and safe trading.